Hi, good evening, everyone. Thank you for tuning in to Phillip Global Markets March Market Outlook webinar. My name is Jason, and with me is my colleague Ming from Phillip Global Market Desk. On today's webinar, we will start by reviewing some of the macroeconomics events that have happened recently. How did the oil price war and COVID-19 affecting the global stock markets? Okay, the agenda today is to elaborate the course of March 2020 stock market. Which ended the 11 years bull run of the US stock market. Further, with the COVID-19 situation worsening, coupled with the oil price war between OPEC and Russia, how these events all plays a part in one of the worst stock market declines from just record highs days earlier. This webinar is intended to provide a perspective on the evolving situation and implication for various market and sector. Also, what do we expect moving forward? Following, I will pass to Ming to talk about technical analysis on various charting. During the webinar, if you have any questions, please do feel free to use the Q&A function, which can be found at the bottom of your screen. You can type in your question during the webinar. However, we will only reply at the end of the sessions. So, without further ado, let's get started. As fear grows about the impact of the COVID-19 virus, the virus outbreak has become one of the biggest threats to the global economy and financial markets. The impact of the COVID-19 could be seen spreading from Asian markets onto global scales such as US markets. We first saw China indexes falling more than 10% in January, while the impact to the US stock market was not seen until end of February and March recently. We saw that in both markets, there is actually a delay reaction from each of the country first known onshore case of COVID virus. China's first case can be traced back to November in China's Hubei province, while the first US reported case of the coronavirus was identified in January. Okay, we can see on the blue line represents the S&P index, 500 index, only started to fall around end of February, right? And the white line showing the CSI 300, which is HS in Shanghai and Shenzhen. As shown here, in January it fell, and start of February, after the Lunar Chinese New Year, it actually rebounded. So in light of this, we will explain in our next slide why was there a rebound in February. Okay. So going back to snippets of our last month webinar, we mentioned about the situation of Hubei province and China in total. The number of newly diagnosed COVID-19 cases, excluding Hubei, has decreased since 3rd February, which is shown from yellow line here, and decreased for consecutive 15 days until February 19. So it seems that the measures put in place by China government was effective to keep the epidemic situation from worsening and under control. Additionally, with the China Bank announcing additional easing in its monetary policy, such as on 3rd February, expanding reverse repo operation by US 174 billion. This allowed the central bank extend the amount of loan to keep money market stable. And it enables banks to have more cash on hand to support firms affected by the virus epidemic. As shown as the previous chart, the market reacted positively. We saw that the China stock market recovered in February and after resuming trading from Lunar Chinese New Year. However, things took a turn once again from these charts in Asia index. By March, The total number of new cases increased sharply in different parts of the world, as shown in many news outlets and news. On March 11, speaking at a media briefing, World Health Organization Director General categorized COVID-19 as a pandemic. World Health Organization, who has been assessing this outbreak around the clock, said they are deeply concerned by both the alarming levels of spread and severity. With the impact felt at the world's top economies, many analysts lowered GDP forecasts for the year. As of March 20 March, we saw that many of the world stock market indexes fell in tandem this month. Market across Asia, with indexes like Nikkei, Kospi, fell more than 20%. So, in another dampening news for the stock markets, other than the COVID situation, one other factor that resulted in the recent market crash was due to the ongoing oil sector turmoil. On March 6, Russia rejected the demand by OPEC officials to cut production of oil to curb oversupply. Oil immediately fell 10%. On 8 March, Saudi Arabia retaliated by discounting $6 to $8 per barrel. Oil price fell further, with Brent crude oil falling more than 30% by 9 March. So, on 18 March, we received news that Saudi Arabia continues to signal to the market that it is not backing down from the oil price war. Coupling that with coronavirus impacting the world's demand for oil dropped another 20%. By then, the oil price was at 18 years low. This chart shows the price movement of the major US indexes. As mentioned earlier, US stock market only showed the impact recently due to COVID-19. Notably, with the saga of oil price war between Saudi Arabia and Russia reported on 8 March, Black Monday, on 9 March, we saw all major US indexes fall by more than 7%, which can be seen here. By 12th of March, as the market reacted to COVID-19 pandemic categorized by World Health Organization, and additionally, a 30 days travel ban from Europe to US, we saw that the Dow Jones and S&P fell further, officially entered into a bear market. The Dow Jones fell 2,352 points that day, or nearly 10%, the biggest one-day drop since 1987. The S&P 500 and the Nasdaq were down each more than 9% on 12 March. Just a few days after, 16 March, saw the Dow Jones index suffering the biggest one-day points plunge in history. Dow Jones industry average fell by almost 3,000 points that day. The S&P and Nasdaq were also each down more than 10% that day on 16 March. All being said, by then, US indexes has fell around 30% since reaching the all-time highs on 19 February. So with the ongoing situation and global economy slowdown, not all sectors are equally affected. For instance, from this chart, we can see that energy sector were the hardest hit as oil prices continue to stay lower with the ongoing price war. Service sector, including aviation, are also directly impacted from the ongoing travel bans. Airlines have already experienced a steep fall in traffic on their highest profit international routes. In view of the coronavirus epidemic, we can see that certain sectors are less affected year to date. Sectors such as our bread and butter food, utilities, and gold are still holding up. For most other sectors, the impact is function primarily of the drop in national and global GDP. Going forward, it may also take longer time to restore the prosperity of retail foot traffic, tourism, and other industry. All this depends on people's judgment of the state of the epidemic situation and the time point when public places are gradually open again. Okay, we will now take a closer look on airline stocks. As the pandemic swept across the globe, airlines have cancelled many of their flights internationally. Even in their respective domestic market, there has been a sharp drop in demand, forcing airlines to reduce capacity where possible. Year to date, we have seen many major declines in the performance of top airlines such as China Southern Airlines, Japan Airlines. Each stock declined by more than 40% since start of the year. So closer to home, on 22nd March, in view of the heightened risk and importation of COVID-19 cases into Singapore, all short-term visitors will now not be allowed to enter or transit through Singapore. Singapore Airlines announced that they will cut 96% of its capacity, and that will go on until end of April. Our neighbor, Malaysia, also announced a movement control on 18 March, restricting movement by barring all of its citizens from traveling abroad. There is also a ban on all foreign tourists and visitors. So with all these new news coming in, more and more borders closed and cities across the world are on lockdown and travel bans, we can expect to see a massive decline on revenue for the airlines heading into Q2 this year. We continue to believe the share price of airline stocks will be depressed as more and more countries put in place measures restricting overseas travel. In view of the volatile and risk-off environment, investors can ride the tide with the bear market and look at inverse ETF such as SQQQ or SPXU. These ETFs short the US index, and as the index go lower, the ETF will rise in price. Please do note that leverage ETFs are not suitable for beginner investors as the loss will be magnified. Furthermore, leverage ETFs are not meant to be held long term, as daily rebalancing will cause the value of the investment to erode over time. Investors can also look at opportunities in gold. I believe just yesterday, Goldman Sachs also called for gold to be pushing higher. As with central bank pushes for more expansionary fiscal policy and continue to cut interest rate across the globe, gold prices tend to rise as investors turn to it as an asset to safeguard their portfolio. So in such uncertain and low interest rate environment going forward, gold prices tend to rise, and we can see the prices of gold recently have been trending higher. So some of the ETFs such as GLD or IAU are the ETF that can track the gold prices pretty well. With that, I have come to the end of the market outlook, and I will now hand over to Ming on technical analysis.
Okay, thank you, Jason, for the market outlook. So right now I will be sharing with you technical analysis for the current market, some of the counters, and also probably index that we can take a look. Okay, but before that, let us take a look at some of our current promotions, okay, that we have. First of all, this is a new Cash Plus account. Not actually very new, but it has been there for a couple of months. So if you have not signed up for this, this is by far the lowest brokerage that our company has offered so far. So do log on to the website to actually find out more information about this Cash Plus account, or you can also talk to your trading rep to get more information about this account. Okay, and next I'll be sharing with you. Okay, give me a moment. Okay, so educational sources where you can find out more information and also articles. For example, are these two websites, which is the Stocks BNB and also the Market Journal, where we have regularly been updating on articles where you can find out more information about the market. Okay, so for those that is interested in technical views, we have a technical analyst in our research department, and he posts all these reports on our Stocks BNB website. It's free to access if you have an account with us. So just do log in here and you will be able to see this. I've attached the link and the QR code. You can scan this QR code to actually go straight to this link. Okay, next we have the Market Journal. Okay, you can see here article written at the beginning of this month, sharing on COVID-19 outbreak and the impact on US market. So before we know the bear market happened, this article was actually posted sharing with you 3 possible scenarios on what may have happened. Okay, by our dealer here, Alan. Okay, so again, QR code is here for you to scan in to read through the article. Okay, next. So now I will actually go on to the technical analysis. Give me a moment now. Okay, I will be sharing with you on some counters while I switch the screen. Just give me one moment. Okay. Right now, I'll be sharing with you that screen. Here you go. Okay. So this is our chart live from Poems 2.0 app, and right now we are looking at this counter called SPY, the Spider S&P ETF. Okay. For the charts, okay, some indicators that I like to use. So a brief background on TA, I like to look from the long-term perspective. For those that have tuned in previously, you will know that I always like to look way before. Okay, so starting from 5 years, I mean, this is quite far away already. So we look from this point. Okay, you can see generally from 2015 all the way until now, you can see that S&P 500 have actually been on a really good uptrend. Okay, this didn't count as a bear market because this move here from September 18 to Jan 2019, right? It was only about a 20% correction, just hitting less than 20%, and it managed to recover from it. That's why they didn't classify this as a bear market. Okay, so with us on the chart here, we can see there's a few indicators, your RSI, which is your relative strength index, and also your exponential moving averages, which is 50 and 200 over here. Okay, so you can actually choose your setting. In fact, you can choose 20, 50, and 200. And right now, I'm actually only displaying this 50 and 200 moving average. So for those who are not sure what moving averages are, it's basically to smoothen out the price movement of the history and then just plotting it in front to let you see. But this is actually a lagging indicator. It's based on the previous prices. Okay, so analysts have been actually saying that there's a death cross quite recently. What is a death cross? Basically, is the lines crossing 50 moving averages crossing below the 200 moving average line, and that usually signals a change in trend. And we can clearly see that here. This huge movement is actually over 30% down from the peak. Okay, so with that, let's take a look in a closer view. Okay, this we have here is the Fibonacci. I will show you how to draw in a short while. And let's zoom in. Okay, you just have to drag which part of the chart that you're looking to see. Okay, you can see that the moving averages here, 50 is the one that is flowing closely to the price. 200 is a little bit further, and you can see that 200 moving average actually acts as a support for for the majority of last year, in fact. Okay, it only broke at the early of this March, and right now this is the death cross that I was sharing with you about, and it just happened I believe it was just last week, last Friday. Okay, And I'd like to also introduce you to this Fibonacci retracement. Okay, so usually where do you draw? You draw from the peak to the bottom, and it will actually share with you the Fibonacci places of or rather percentage where there may be a potential support or resistance. Okay, right now clearly the lows have been achieved here, the 218.26. Okay, and the high was 339.08. This is SPY, the ETF itself, not the index. Okay, so if you are looking for and I mean, some of you have already questioned whether this downtrend will likely continue. In my own opinion, right, I'm actually looking for points to continue to short this market through the ETF that Jason actually recommended, which is your inverse ETF. Okay, basically inverse is just meaning that you're looking at it in the opposite direction. Okay, but so where are we looking at? Is the 61.8%. Recovery to a 61.8% region, which is actually 264, about $264 in the SPY, before this downtrend should continue. And looking at it, it's likely that the moving average, the 50-day moving average, will be at that level as well. And this likely will constitute as a strong resistance, okay, which investors can look out for. Okay, but obviously I'm not saying that once you reach the 61.8%, you immediately go in and short the market, or rather go and buy the inverse ETF straight away. Okay, we will need to actually look for any reaction over there, see whether it holds there, or in fact, if it doesn't hold, what is the next level you're looking at, which is going to be your 50% region. And that will, at this level, is about $279. Okay, and even that may also, TA again is really not 100% accurate. If it's 100% accurate, everybody will be making money. Okay, so these two regions are places where we can look at to see whether is there a continuation of this downtrend. Okay, so right now I believe this Fibonacci is actually a good indicator, since we can identify the low point at the moment and see how this trend can continue to form in the near future. Okay, so it's likely that even though right here we can see an oversold in RSI, it was actually just the beginning of the downtrend. And due to macro factors, we can see this may likely continue on. Okay, that is for the SPY. Next, I'll be sharing with you on two other counters, mainly one called, I believe a lot of you have knowledge on, which is Tesla. Okay. Give me a moment where I switch it over to Tesla. Okay, so here you are able to see Tesla. Again, let's take a look at the long-term chart. 5 years chart. Okay, you can see as recent as only last year in October-November region, Tesla went on a strong uptrend. Okay, and this didn't have any fundamentals to it. It was just purely sentimental. Okay, again, I've drawn here the Fibonacci retracement, but I will first remove that first, okay, so that you can see where is this line that I've drawn. Okay, interestingly, this line I drawn was actually a resistance line that I drawn way before. Okay, I didn't drew it now, it was saved here. You can see from from middle of 2017 all the way until May 2019, or rather in the middle of January 2019. It was actually more of a sideways movement if you look at this chart. So clearly there was a resistance at 378.65. This region, I'm not talking about this price level, but this region, so around this $380 level. And what we can see right now actually is very interesting. So we can zoom in here. Okay, this line, when you zoom it in, what happened here is actually a very classic example of a resistance turn support right here, and it's quite accurate in that sense. This bar closed down, but actually the next bar didn't manage to form downwards anymore. So there was a short-term back up today, the past few days, in fact. And this support right now may be quite strong moving forward. Okay, if you look at the moving average for this, because the price movement was so huge, it's actually lagging so much that this moving average is so wide. Okay, percentage movement is quite crazy for this counter. It's quite volatile. Okay, so it's not really keeping up with what we are seeing here. So it may not be a good indicator in this example. But RSI also show a very interesting point here. Right at this bar where the support turn resistance, resistance turn support, I'm sorry. Okay, it's also showing an oversold value of below 30%. Okay, so if you're not sure what is RSI, it's basically it's just an oversold or overbought value where prices are being driven way too fast and way too fierce. So it may also signal a change in there's a change in the trend, so-called short-term one. So at least right now, what we are seeing here is actually a retracement upwards from this downtrend. Okay, so now if we can establish this as a low point and this as the high point, we can actually draw on this using the Fibonacci, which is this indicator over here. Okay, the top to the bottom here. So same thing, 61.8% level, which is actually also coincides with the 50-day moving averages. That may form your first form of resistance. And if that managed to be a resistance, we can expect price to continue to go down and come back to test this support level of 380. Okay, so this region that you may look at. So, I mean, of course, investors who are thinking to long, you may want to see whether is this movement what you are looking out for? Is it worth it to take the risk to go in and buy? And then probably there may be a resistance at 61.8%, which is your 580 level. And if the momentum is strong, it may reach the 50% level, which is your $650 level. Okay. Again, this is very volatile. So technical analysis may not be that strong, but what we can see from the long-term wise, okay, is the one that I'm showing you here is actually very strong, the resistance and support, because this resistance has been there for, it's multi-year resistance, and somehow it managed to form a support over here. And we can expect this support to be relatively strong, in fact, okay, because of this strong resistance. Okay, but we will see coming future. Okay, so with that, I will go on to the last counter that I will share today, which is also traded in US, called Alibaba. Okay, give me a moment now. While I pull out the chart. Okay, for those wondering where you can review this webinar presentation, you can actually find it on our YouTube channel about 2 days after this webinar. So it will be posted there, and you can rewatch this webinar. Okay, for Alibaba, let me just share that. Okay, so right now you can see this chart is Alibaba. The ticker is BABA. Okay, for those who have not seen this counter before, but like I said, this is quite heavily traded. Okay, sorry, the chart seems to be still loading. Give me a moment. Okay, 3 years chart. Okay, let's take a look at 3 years chart. Okay, there is this trend line that I drew back in also in the middle of last year. Somehow, what we are seeing here may be a false break, and with price managed to bounce back, but to me, this actually doesn't signify a good place. It's sort of stalling there, but not actually doing much, because it has actually passed this trend line, and with that, it's actually not a good indication, okay, of the trend line still being steady. But what we can see is that there is a clear support at 170, not from the past, but from the most recent one, there is this psychological round number support of 170 US dollars. And with the market coming down so much, actually this counter, I would say relatively has performed better than some of the other sectors in the market. Okay, you can see RSI actually is still showing, is still not showing oversold, and but going by valuation, fundamentally, this company is still looking very strong, in fact. And I mean, if you think about it, people staying home, people buying things, people going online to shop. So Baba is actually one of them providing this service, which is actually going to be beneficial to them. Okay, but of course, we can expect volume of people spending money online may become lesser, so that may be also causing it to come down. Okay, but with that, you can see also moving average is actually still not, still have not did the death cross, as you can see. Okay, so for a change in trend, right, we are still waiting for it to cross back. Okay, let's see if I can load out the 5-year chart. Okay, so 5 years, you can see generally back in 2016 all the way until now, the chart, I mean, for this Baba, it's quite clearly an uptrend. There was a downtrend here. You see this death cross, and then a cross back up. So right here, we have a slight sideways market, but it was still having a good base here. It was an uptrend, but moving average wasn't telling the full story. But this uptrend was forming nicely, and we had a very good bull run at the end of last year before this so-called bear market. But in terms of the whole index, the index has performed, I believe, worse than this company. And I would also looking at investing in this company based on the fundamentals and not technicals. But technically, it's still very strong. We are still waiting for the death cross to happen. And if it doesn't, I mean, if it's still having a crisscross, we may look at a sideways market for a bit of a short term. Okay, but do take note, if this trend line, there's a few trend lines that can be drawn. Okay, you can draw it all the way to the long-term one from 2016 to this point. If you use these 2 points as your low points, right, we are actually looking at still some leeway to go about 160 US dollars level for price entry. Okay, so again, TA is really up to your own judgment. Any 2 low points that are drawn may constitute to a trend line, and of course, it may not be correct also. But fundamentally, I like this company. That's why I'm actually looking for a good point of entry, which is at this level. Okay, with that, I've actually come to the end of the technical analysis presentation. Okay, and I will have one last poll for you before we go on to the Q&A session. Okay, give me a moment. Okay, I'm not sure if you can see this poll. So it's just checking how many US trades you have done so far in 2020 based on the current market situation. And if you have not, or you are not comfortable with doing US trading, why is that? So probably you can share it with your TR and let them know your concern, so that they can help you with that. Okay, with that, I will come to the Q&A. Just give us a short moment. Okay, for further inquiries on night trading matters, right, you can give us a call at this number. Okay, and okay, let's go to the Q&A. We have a few questions here. Okay, first of all, one of the questions that we have here, is it likely for OPEC and Russia to agree on production cuts in the near future? Maybe we'll have Jason to actually share that with us.
Okay, hi, my name is Jason. So, okay, for this question, I believe there is a lot of scenarios going on. Yes, it's likely also for OPEC and Russia to agree on production cuts in near future at some point, because ultimately it benefits the whole cartel and Russia itself. As of the oil prices right now is trading at around 25, 20, 24, 20 to $26 US dollars right now. So with this low oil prices going forward, right, Russia will not be able to actually meet their production costs, which is known to be around $40 per barrel. And in the first place, OPEC has actually asked them to reduce their total oil supply, world oil supplies by 1.5%, which they did not agree up until recently. So another interesting news is that aside from OPEC and Russia, we see that there's another possibility and scenario that will be actually the US and Saudi Arabia. They are actually right now the top two oil producer in the world. So, but the thing is, around the world right now, we are combating the COVID virus. So right now, it's not their utmost focus. A lot of countries is just focusing on, to combat this virus, and I don't think it will be that soon that oil prices will actually have this movement upwards. And also with the oil demands going lower with this virus, right, we do see that the oil prices will continue to stay much lower for a period of time, at least in Q2.
Okay, the next question that we have with us here is, what are some of the retail food companies that are least likely to be affected, as shown in the sector year to date? So let me just show you the slides that Jason was actually sharing.
Okay, while we move to that slide, so basically that sector that was least affected, as shown in my chart previously, regarding the retail companies, actually we think about it as our supermarket. So in the US, right, it will be our Walmart, Costco, and Kroger. So I mean, in Singapore, we do see the phenomenon, like everybody is still rushing to the supermarket to stock up food supplies, and of course, actually all these major supermarket chain have home deliveries also. Uh, we did see that they were unable to cope with the demand actually, so people are still queuing at supermarkets. So this phenomenon has happened across many countries, especially since the outbreak of the COVID virus becoming a pandemic. So this stocks has been holding pretty well year to date. So as I mentioned, it was for US, it will be the Walmart, Costco, and Kroger. Some of the examples. And because since we are on this slide, so in terms of utility, if you want to actually go for some defensive ETF under utility index, we can recommend a few, which is the VPU, the Vanguard Utility ETF, or the symbol IDU, India, Denmark University, iShare US Utility ETF.
Okay, so we have a question here on good entry price for Alibaba. Okay, so with the chart just now, I was sharing with you. Okay, 170, 160 price region is where I'm looking to enter based on the long-term trend line that I drew. Okay, so 160 US dollar is the price that I'm looking to enter. But if not, I'm actually happy to go in around this price region of about 180 as well. Okay, but this is for a longer time frame that I'm looking at, probably to write out the this period of uncertainty. Okay, we have also some questions on the Cash Plus account that I was sharing. So if you have more questions on the Cash Plus, please do really just contact your trading rep, because it is actually very difficult for me to explain on the account features right here on the webinar itself. So your trading representative should be well positioned to actually answer your questions on the account. Okay, so I hope that will help with understanding on the account. Okay, so next we have also some question on Okay, so we know that there was a 2 trillion stimulus bill passed yesterday. Okay, so an attendee actually asked what is the immediate impact on the market, so we saw a surge in the US market yesterday. So moving forward, what can we expect, Jason?
Yep. So right now, actually, as of now, we at the pre-market session, we already see a lot of some of the stocks actually gone up. But of course, people are still pretty concerned of this COVID-19 virus. So right now, we do see some holding back in terms of the buying strength, and the future-wise, it was pretty flat as of now.
Okay, I'd like to add on to that as well. So, I mean, also there is a question on sectors which will benefit from the 2 trillion stimulus package. I mean, generally, I think it will benefit the entire. This stimulus package is to help the whole economy, okay? But we still do not know the impact of what this COVID virus has on the world economy, not just US. We are talking about the whole wide world, because Europe is badly affected at the moment. Okay, so US doing this may, I mean, short term wise, you may help, but I mean, longer term, once the bad news starts to come in, or once the result starts to not be hitting expectation anymore, we can probably still expect some downward movement in the market situation. Okay. Okay. We'll take 1 or 2 more questions before we end off the webinar for tonight. I will take one more on TA, but let me just take a look first. Okay, one more before we go into a TA related one. Okay, so now the uncertainty of COVID-19, right? If it's going to prolong till end of the year or even next year, which looking at the scenario or situation right now, it is quite likely. Okay, how will that impact on the stock markets? Maybe Jason, you can share on this.
Okay. So looking at today's, even as not going to end of the year or even next year, I mean, if it actually prolongs to Q2 or even Q3, if the outbreak of this virus is not controlled well, we will expect a heavy drawdown in all the major stock markets once again. So which is why at this session, we are recommending some of the ETF that you can look at, which is the inverse. Because as of right now, there are a lot of countries still trying to cope with this outbreak of the COVID, especially the US. And even in closer to home, like Singapore, we have come up with additional measures announced yesterday, like, you know, closing of all entertainment bars and etc. And then not having more than 10 people gathered at one place. So we see that, you know, this virus is definitely not easy to be contained easily, in a sense, compared to the SARS virus that we had in 2003. So it definitely takes more effort. And then if it prolongs another quarter or two, definitely we will see major impacts in terms of countries shutting down, you know, their workforce, schools, and this will definitely impact the stock market in the next quarter or two, even not going to end of next year.
Okay, with that, I will move on to one technical analyst. I mean, I will do one more counter on TA. Okay. Let's do on Apple, since everybody is familiar with Apple, right? Okay, let's take a look. Okay, here we can see Apple. Wow. Okay, 5 years first. let's take a look at the long-term one. Okay, from 2016 all the way until now. Generally, I would say the uptrend, it may still be intact. Okay, even though we can see a huge price movement for the past 1 month. Okay, wait, let's take a look. Let's draw first. Okay, so 230 level, it managed a false break here. Okay, let's take a look. Okay, this bar actually broke the resistance turn support area. So this one may not be that accurate in that sense. So I don't really like it. Okay, and looking at it, the oversold reaction, there was a, sorry. Okay, we look at the near term. There was actually oversold here. And you can see the 200-day moving average acted as a support here, and it managed to recover and hit back the 50-day moving average. So in fact, just using the 50 and the 200-day moving average, shows you quite a bit of information already. This level and this level to exit. So this movement is already about $40 US movement, and we can see actually the trend has been so strong for the past 1 year, from all the way to from 170 all the way to 320. We are looking at about 100% gain over here. But sadly, there is also a downtrend that is actually short-term downtrend that is forming already. Okay, so probably these two lines here. Okay, if you want, I can even draw just these two lines and see where it goes. Okay, so we are expecting it. Just nice if you draw these two high points, we are looking at 200-day moving average as the next resistance level for the downtrend to continue on. So what we see here is the first wave, second wave, and coming up to hit, or rather if you want to use it as this also a wave, this is not a wave. So yeah, I would say 200 and probably, let me see, in fact it's actually very near. If you hit 250 level, right, it's probably a place where I want to short. Downtrend movement is looking strong, with coupled with the current situation on how COVID is developing. Likely is going to affect their sales. Okay, production also was also affected. So all these macro is actually not doing much favor for Apple itself. But again, in a long-term perspective, right, there's actually a trend line here, I believe. And this has also been broken as well. Okay, so what I can see is that likely this downtrend may continue for a short while, and we are looking at $200 for round figure support. Okay, since this resistance turn support is not holding already. Okay, probably a $200 region. Okay, if it doesn't hold, yeah, $200 first, then we'll see how it goes from there. But if you want to use the Fibonacci for this, you can also do so. Give me a moment, let me just draw that for you. To the low point. Okay, again, you can see just nice the 61.8% region is actually at your 200-day moving average. So if it hits that and comes back down, I will not be surprised, as this is likely going to be acting as a resistance point, or rather a support for this downtrend to continue. So a lot of these indicators you can actually play around, and also on how to use it, maybe a little bit more, you can read up a little bit more online as well. But yeah, with that, I mean, for Apple wise, the short term, I'm going to be bearish. My take is going to be bearish, and looking to enter at this 250 to $255 region to short Apple. Okay, so with that, I've come to the end of the webinar, and if you do have any further questions, you may want to give your trading rep a call. Okay, we are trading there, so unlikely we can take questions on the market itself. Okay, and thank you so much for attending tonight's webinar. And this is actually a webinar series moving forward. Please do sign up for the next webinar at the end of next month. We will be continuing the webinar series. And once again, Jason and Mio, thank you for attending. and have a good night.